Forex market size and liquidity. The majority of Forex exchanging happens on what's known as the interbank market. Dissimilar to other monetary business sectors like the New York Stock Trade, NYSE, or London Stock Trade, LSE, the Forex market is neither an actual area nor a focal trade. The Forex market is viewed as an over-the-counter, OTC, market because of the way that the whole market is run electronically, inside an organization of banks and non-bank monetary establishments, NBFIs, constantly more than a 24-hour time frame. This implies that the FX market is spread all around the globe with no focal area. Exchanges can occur any place as long as you have a web association. The Forex OTC market is by a long shot the greatest and most famous monetary market on the planet. What's more, it is exchanged universally by an enormous number of people and associations. In an OTC market, members can be fastidious and figure out who they need to exchange with contingent upon exchanging conditions, the appeal of costs, and the standing of the exchanging counterparty, the other party who takes the contrary side of your exchange. The diagram beneath shows the 7 most effectively exchanged monetary standards. The US dollar is the most exchanged cash, making up 84.9% of all exchanges. The euro's portion is second at 39.1%, while that of the yen is third at 19.0%. As may be obvious, a large portion of the significant monetary standards are hoarding the best positions on this rundown. The dollar is lord in the Forex market. You've most likely seen how frequently we continue to make reference to the US dollar, USD. On the off chance that the USD is one half of each and every significant cash pair, and the majors contain 75% of all exchanges, then, at that point, focusing on the US is an unquestionable requirement. Dollar. The USD is top dog. As a matter of fact, as per the Global Financial Asset, IMF, the US dollar contains generally 62% of the world's true unfamiliar trade holds. Unfamiliar trade saves are resources hung on hold by a national bank in unfamiliar monetary standards. Since pretty much every financial backer, business, and national bank own it, they focus on the US dollar. There are additionally other huge justifications for why the US dollar assumes a focal part in the Forex market. The US economy is the biggest economy on the planet. The US dollar is the hold money of the world. The US has the biggest and most fluid monetary business sectors on the planet. The US has a stable political framework. The US is the world's only military superpower. The US dollar addresses about portion of worldwide credits and bonds. Bunches of nations and unfamiliar organizations acquire in USD. The US dollar is the mode of trade for some cross-line exchanges. For instance, oil is estimated in US dollars. Additionally called petrodollars. So to purchase oil from Saudi Arabia, it must be purchased with the US dollar. In the event that Japan has no dollars, it needs to sell its yen first and purchase US dollars. Essentially, the world is vigorously reliant upon non-stop USD supply to work with exchanges, installments, and advances. Hypothesis in the Forex market. The fundamental elements of the Forex market are: to move assets starting with one cash of a country then on to the next money. To give momentary credit to back exchange between nations. To stay away from more support against unfamiliar conversion standard changes from when an exchange is started and when installment is gotten. To theorize. Something significant to note about the Forex market is that while business and monetary exchanges are essential for the exchanging volume, most money exchanging depends on hypothesis. All in all, the majority of the exchanging volume comes from merchants that trade in light of the transient value developments of money matches. The exchanging volume achieved by examiners is assessed to be over 90%. The size of the Forex market implies that how much trading volume occurring at some random time is incredibly enormous. This makes market liquidity, which is the capacity to trade a huge amount of something with insignificant cost influence, extremely high. The expansion in market liquidity since the 1970s has yielded many advantages. According to the viewpoint of a momentary dealer, liquidity is vital on the grounds that it decides how effectively a cost can change throughout a given time span. A fluid market climate like Forex empowers gigantic exchanging volumes to occur with no impact on the cost, or cost activity. While the Forex market is somewhat extremely fluid, the market profundity could change relying upon the cash pair and season of day. In our Forex exchanging meetings, some portion of the school will make sense of how the hour of your exchanges can influence the pair you're exchanging. Meanwhile, we should find out about the various ways that people can exchange currencies. In the next video we will be talking on how to trade Forex, so do subscribe, Like and share if you haven't done that already in order to be notified whenever we have a new video.